Hello and good morning, traders. It's Monday, 26th of February 2018. Like every day, every trading day, welcome to Real-Time Daily Trading Ideas. We will speak about trading ideas, strategies, market screening, and maybe one or two questions from your side directly answered in our webinar. We have 5 days a week, 5 different traders. So let's see, have a nice start. Our goal is quick and smart, 15-20 minutes, and we will start like always with our risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything on our web pages. This is me. My name is Jens. I'm talking from the Berlin office of Admiral Markets. My English is made in Germany, but hopefully some of my quality too, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, like today, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Mike's day. On Thursday, it's Nenad's day. On Friday, it's Dirk's day. Our leading day traders live every business day at the same time. Yeah, and of course, if you like to trade Forex and CFDs, you will get many benefits only with Admiral Markets. For example, you can choose which tool you like to trade, MT4 or MT5. We have both. Choosable leverage, great safeguards like our negative balance protection policy, and of course, great spreads like our bestseller DAX 30, typically spread of just 0.8 points during the main trading hours. Checking out everything like that on admiralmarkets.com. They will find also something about our regulatory background and our contact details. Call us, send us an email, or visit the other channels like YouTube or Facebook. Everything's linked and displayed on admiralmarkets.com. Enough from my side. Now it's time for the day trader of today. Hi, good morning, Jay. Your view to the markets.
Good morning, Jens. Good morning, traders. Apologize for my voice. Yes, it is me. I was at a retreat over the weekend, and there was quite a lot of psychological motivation going on, so my voice is gone. Hopefully you can still hear me though. We learned a lot about psychology, and in the end it is psychology that's moving the markets, so it was extremely pleasurable. Yes, we have a lot of algorithms and machines, but they are in the end still programmed by humans, and as long as artificial intelligence doesn't program itself, we stand a chance to make some money. So let's get started. Let me move my screen over so I can see it, and off we go. Trade last week, we were diddling around a long dollar versus yen. Idea was right. Unfortunately, we never got executed. So as you can see, market ran away from us, and that is part of trading. It just happens. Just blow it off. Don't worry about it. You had the right analysis. You had the right idea. Maybe potentially learn from it that startup positions aren't a bad thing, and that's something that I keep trying to show you every week is a startup position, so at least you're involved. And what we need to do after the first quarter is to show you how we double into a positive position or increase our risk as the market is going for us. Anyhow, what did the market do overnight? We had some trade balance numbers out of New Zealand that were positive, and surprisingly enough, we saw the US dollar 10-year coming off, and there's some weakness creeping into the US dollar. So New Zealand dollar, US dollar was one of the strong performers overnight, and all the pairs currently being led by the pound versus the greenback. The greenback is the dollar. Dollar is really giving up here some ground. Okay, what do we have on the agenda for this week? Well, this afternoon we have ECB President Draghi speaking. That's going to be important because the last minutes out of the last monetary meeting weren't that conclusive in terms of, hey, dear ECB, when you're going to tell us, the market, when you're going to change your wording about tampering. And they're not doing that. The other question that the market is asking is, hey, ECB, how do you what's your stance towards the appreciating euro? Because the euro has appreciated for over 3.5% on a trade weighted basis versus its largest counterparts since November. So there's some pressure on the euro going up. That was alleviated a little bit when we were rejected at the 125 level, but it's a strong euro expected for this week and a weak dollar. Then on Tuesday, guys, we have Fed Chair Powell. He's the new boss in town, and everyone's really excited to see if he's going to drop some comments on how are you going to position your Fed, your Fed, Mr. Powell, because that's what it is right now. Expectation in the market currently that he's going to follow Janet Yellen's path a little bit. So we'll see if he's going to come up with his own battle plan, or if it is continued gradual rate hiking. More towards that in a bit. And then on Wednesday, we have Eurozone CPI flash. Flash simply means it's the first one. And as you may recall from our Monday morning briefings, all eyes on inflation and increasing inflation right now. Fortunately, you're all English speaking because on my YouTube channel, I put out something on inflation and how equities are reacting historically to inflation. But it is in German, sorry guys. And then we have preliminary GDP, and we have a lot of PMIs this week. I haven't highlighted the PMIs because currencies do not tend to react immediately to PMI numbers, but they're very, very important in conjunction with GDP growth in giving us a very good idea where we are in terms of the economic cycle. And then towards the end of the week, Thursday is an important day because we have core PCE. That is the Fed's preferred measure when it comes to inflation measurement and personal spending. And then we have unemployment claims. Then Fed Chair Powell testifying part 2. That's going to be important. And why is my computer not working? Let me see. Okay. Were we done on the other slide? I hate that. I apologize, guys. Yeah, we were done on that slide. So qualitative part of the presentation. It's very slow, cumbersome and slow. Come on. Thank you very much. Risk events in focus for this week. Dollar, as alluded to, we have Powell speaking. Good. Mr. Powell, what are you going to do with your Fed? Then the problem that we're facing is, and you'll keep seeing large investment firms like Goldman, for example, coming out with adjusted rate hike expectations. Hopefully you guys are on the ball and you realize that since end of last year, the Fed has managed the market towards 3 rate hikes in 2018. Now, in the last minutes, the Fed stated, hey, you know what? Inflation is coming in a little bit stronger than expected, and we hope that the Phillips curve is not dead. Phillips curve is a model that says that a tight labor market will cause wage pressure, will cause rising rates, and the expectation then is for the central bank to act on that. So in the end, Goldman is now coming up and saying, guys, 4 hikes, the risk is to the upside. So here's professional wording for you. Upside risk in terms of rate hikes means Goldman's coming out with a paper last week. They came out and said, hey, we see upside risk towards 5 hikes. Now, what are the yields doing this morning? I said it early on. Who was paying attention? They're coming off. Professional language means they're decreasing. If yields are decreasing, that means somebody is buying hundreds of millions of dollars of treasuries. Otherwise, based on the bond formula, they can't decrease. Yields coming off, meaning a weaker dollar. So quite interesting. Core PCE, as alluded to, is the #1 measure for the Fed. They love looking at that, and we're going to have to see if we get a deviation from that or not. Yields in the short end will react to that immediately, so there may be some very good trade opportunities on Thursday. And then we have personal spending, which is, again, expected to come off a little bit. Here you have that wording again, coming off, meaning coming in lower than expected. Currently, we have an 84.5% probability based on the futures market that there's a rate hike in March. Pretty much it's going to go towards 100% in my expectation until that date. Canadian dollar, all you need to know right now is that it's the fastest growing economy in 2017 within the G7. We get some GDP numbers, and it's, as you can see, they're also expected to come off, but we still have some solid growth in Canada. Canadian dollar is very weak last week, and it started weak into the new week. So I'm watching for my colleagues at the large institutions, how they're going to pre-position to play that beast this week. Market was pricing in around 40% probability for a rate hike in April in the wake of inflation data last week. If you may recall, retail data came in really bad, but inflation data came in higher than expected. So immediately the futures market started, the short-term interest rate market started pricing in a higher probability for April for another rate hike. You guys are expected to know what the probabilities are at what future central bank meeting date and what the market has priced in. So if something that's not priced in happens and occurs, you can make money. Euro, we have quite an interesting weekend coming up. It's the weekend of politics. Why? Because in Italy we have elections, and they're electing the lower and the upper house. And in general, let me tell you, because you can read all of this on your own, markets hate uncertainty, okay? And in Germany, we have a vote by all the members of the SPD, the second largest party in Germany. If or if not, the so-called base is in favor of the grand coalition with the CDU, CSU. So they met and met and met and met, and for weeks and weeks and weeks, we only had a temporary parliament and a caretaker government. If the base is voting that grand coalition decree down, then we could see some weakness in the euro. And if some far-right party coalition wins in Italy, or we have a hung parliament there, and the prime minister has to also implement a caretaker government, then we're facing new elections in Italy as well. Can you imagine Monday morning opening, Germany, no government, new elections, and Italy, no government, new elections? That would be a great euro short. Hence, guys, if my colleagues at the large firms expect a scenario and assign to it a larger probability, we can bet that they're going to have the euro rise this week to then sell off of higher levels. So I'm quite bullish on the euro for this week, as I said early on. Okay, let's see if the computer decides to give us the next slide. It's super slow. I have no idea why it's doing that. Hello, can we please have the next slide? Hello, thank you. Okay, pound. Prime Minister May is speaking about Britain's post-Brexit relationship. And guys, politics, geopolitics and politics, it's one thing that I would like to pass on to you this morning is this. We have a great saying in Germany that that markets that are moving based on politics have short legs, meaning whatever the outcome here is, you can fade it. So currently we see cable creeping higher. The strongest currency this morning so far is the pound, but we do have some headline risk based on Corbyn and May both speaking. Corbyn is speaking today. He's the opposition leader, as you can read here. And then May will have to speak on Friday regarding Brexit. So pound will be driven by economic data and headline risk. Aussie dollar, we have in China, we have the Caixin manufacturing PMI coming in, and Australia is a suburb of China. So we always keep an eye on Chinese data when it comes to trading the Aussie dollar. And then as you can see here, the key points from the last report were the companies in China were generally optimistic, although total new work and export orders had expanded at a slightly softer rate, pointing to a moderating demand. But as long as PMI is globally above 50, we have a global coordinated economic growth expansion. Currently, market is pricing for the Aussie dollar a first rate hike in Q1 of 2019. Again, you need to know that. Yen. Friday unemployment rate is expected in the medium term to fall towards 2.5. Job to applicant ratio continues to rise. Now, there's such an odd thing in Japan that they look at Tokyo core CPI as a prelude to the nation's core CPI. So the market always has an eye on Tokyo core CPI, which is expected to tick up higher. And I'm giving you a couple of side notes again. Last week, there was a familiar market talk that popped up again, i.e. the discussion if the Bank of Japan, in order to reflate its economy and weaken the yen, in case there's a new recession, should start purchasing foreign bonds as part of its policy. Currently, they're not allowed to do that. So if you're new to this morning briefing and you didn't know that, here's something that you may want to keep in the back of your mind. This is a story that keeps popping up over and over again, and maybe one day they'll do that. What are they doing currently? Yes, they're printing money. That's called quant easing. But they're doing two more things. They're doing QQE, which is called quantitative easing. That means they also verbally intervene frequently via jawboning, talking their currency weak, and they do such a thing that's called CCY. YCC, yield curve control, because out of the Western economies, Japan is the only one that's also controlling, where the central bank is controlling the 10-year part of the yield curve at 0%. Maximum bandwidth allowed 0.1%. And then they come and buy unlimited amounts, as they did a couple of weeks ago, until the yield is coming off again. So the problem for any central bank in a deflationary scenario is that one major part of inflation, for it to prop up, is inflation expectations. Do companies and consumers expect inflation to increase? And that is a big problem for the Bank of Japan, because they haven't been really successful in increasing inflation expectations within their economy. And so the market doesn't really see a threat or the possibility of the Japanese economy really reaching the 2% inflation target. So enough of that. Let's look at other markets. What does the Commitment of Traders report tell us? It tells us, oh no, this is when my, keep repeating myself, my presentation crashed. This is really bad. Oh no. Okay, disregard what you're seeing. Listen to me, please. This says that the yen is coming towards a short positioning in the dealer base. So forget this, please, and listen to me. The yen is coming towards a seasonal short positioning in the dealer base. Why is that? Because the fiscal year in Japan ends end of March. And that means that a lot of assets are being repatriated, coming back, and that means that the yen is being bought. So the largest funds, where do they buy yen back if they need to buy yen back? From their dealers. Hence, the dealers are going short, are being short positioned, sorry. Volatility coming off. Those numbers, that's interesting. Those numbers seem correct again. VIX 1946, yeah. Okay, you should have noticed this last week while you were trading, that the daily ranges kept coming off a little bit, meaning they became shorter. So there you can see that the volatility in the Forex space as well as in the equity space is coming off a little bit. Option pricing tells us dollar yen long for today. Well, that's not happening. Aussie dollar long for Monday. That is happening. Gold long for Monday. That is also quite interesting and potentially happening. Why? Because the dollar is coming off. Gold is being quoted in US dollars. So if the dollar is weak, gold's coming up. Option flows, what do they tell us? Bullish for Monday, Aussie, pound. Pound's already performing. Aussie already performing. Yen strong. Nope, not seeing that. We have risk on sentiment, Swissy and gold. Quite interesting. Bearish for Monday, Canadian dollar and euro. Yeah, but Mr. and Mrs. Option Market Maker don't really see that right now. So idea for beginning of this week is long euro yen. Why? Because month-end inflows into the euro are very supportive for the euro, and it is month-end. So we see a strong euro and a weak dollar for the whole week. And then yen weakness, why? Because we have risk on sentiment. Hope you guys saw Japanese equity index. That is a long on pullbacks. Yeah? My personal opinion, obviously. Trade structure has always started position with two long levels to add to the long, and risk for the trade is that the risk sentiment would be turning. Nothing on the docket for today. Don't really see a turn. Here's a trade. Profit target at 132, the figure. We like round numbers when we want to go into the market and out of the market. And then there's a role reversal here, and below is liquidity. So two natural places to add to your long. Hopefully you gained some bits and pieces of additional institutional knowledge from this morning briefing. Guys, thank you very much for your time to come in and listen. Jens, thanks for the opportunity. And I wish you an excellent trading week. Make some money, make some yield. And I'm looking forward to speaking to you guys again next week. Thank you for your time.
Thank you, Jay. Tomorrow is another day, another day trader, another trading style. So if you have time, see you tomorrow to the same time. Bye-bye from Berlin and have good trades.